U.S. stocks are lower, the yields are lower, and the U.S. dollar is mixed against the three major currency pairs, at least with a risk-off tinge to the price action today. The U.S. dollar is lower versus the yen. The U.S. dollar is higher, however, versus the euro for the fifth consecutive day, and the pound sterling. I'll go through the technicals that are driving these three major currency pairs in this video, so let's get started. Looking at the euro versus US on the 4-hour chart, we're actually moving to new session lows as I speak, and that has taken the price up below the 50% midpoint of the move up from the looks like May low right here to the high price that we saw in the month of September. That 50% comes in 1.14919, and breaking below that level gives the sellers more control and tilts the bias, on the other side of the fence, if you will. The next target area might be down here at this swing area right through here, which comes in between 1.1447 to 1.1458. Put that in yellow. This level is defined by these swing highs right through here, which formed a little bit of a ceiling. We had a failed break up there and then reestablished the ceiling right here before moving to the upside with momentum. Then we came back down to that swing area right through here before moving to the upside. On the way to the downside here, we did stall right there and then move below that level, use that level as resistance before moving down and test the 100-day moving average, and then move to the upside. And now we're moving back down toward that level. We'll see what happens at that level on further momentum to the downside. Close risk would be the 50% retracement. Currently, that's for traders. At the high price and trading here today and late yesterday, the high price that did extend a little bit above this swing area through here, which again was defined by a number of different swing lows and swing highs. I'll just outline some of them right through here, where the price moved back above that level just a little bit before moving to the downside. You can see that right a little bit closer on the if I put this to the hourly chart. And take a look at the highs right here above that area. Yesterday we had an up and down session button, and you can see in trading here today we tried to move to the upside, but found willing sellers just above that swing area through here before rotating to the downside. The last 4 or so hours have seen the price move sharply and consistently to the downside for this pair as U.S. stocks started to get hit a little bit and saw a rise in the U.S. dollar as a result. Let's take a look at the dollar versus yen next, and this currency pair is moved up to off the 4-hour chart, moved up to the highs that we saw in last week's trading near the 154.47 level and found willing sellers. I'm going to put that on the hourly chart just to start off here to take a look at how close we got. And you can see that we have 1, 2, 3 separate highs that come in near those levels over the last 4 trading days. 1, 2, 3. So there's something about this high price up through here near the 154.47-ish type level that gives traders the go-ahead to push lower, or at least lean, and then see what happens. A lot of trading is about leaning against levels that give you some risk-defining levels. If the price were to move up sharply above this old highs right through here, this double top right here, then you get out, or even 10 pips above that level. But in this case, the market did rotate back to the downside, and you can see that we've moved back below the 100-hour moving average as well. And might as well keep it on this chart. But you see these different swing highs right here, which form this ceiling through here. That's where we are heading into right now or today. That ceiling area comes between, that old ceiling area comes between 153.15 and 153.39. Also in play is the rising 200-hour moving averages, which is near the low of that swing area right through here. So this area right here is now the big decision point for sellers on the downside, and buyers for that matter. If we get below it, it's more bearish. If we stay above it, I wouldn't necessarily say it's more bullish, because we are below the 100-hour moving average. We're going to need to get it back above that 100-hour moving average to give the buyers the go-ahead to push higher and tilt the bias more to the upside. But it certainly helps the cause for the upside by staying above that 200. But once again, we need to get back above the 100-hour moving average, to stay above that 100-hour moving average to give the buyers more control. Finally, let's take a look at the sterling versus U.S. dollar. And this currency pair, like the euro versus U.S. dollar, is stretching to new lows into the U.S. session. I will put this on the 4-hour chart to take a look at what it looks like off of that perspective. And if we go back in time, we're kind of in a nowhere's land here after breaking below this floor here. This is a clearly defined floor at the 1.3139-ish type of level. And you can see in trading this week, this week is defined by this dashed line right here. The price did move above that that level at 1.31398 briefly, but then moved to the downside and is stable at that level, now extending away from it. So the sellers are taking more control in this currency pair. The next key target will likely be down here near the 130.13 level. So we're still about 40 pips or so away from that level on the downside. So there's room to roam. What we do know is that this level is a key resistance up here, not only today but going forward. I guess I had outlined this other level right through here, which was a swing high through here, but and a low here. But that may be closer risk of 1.31156 for the sterling versus US dollar. So there you have it. A look at 3 major currency pairs to kickstart your trading day. My name is Greg Michalowski. Good fortune with your trading. Bye bye now.